Good evening, everyone. Maneco 64 here, home of alternative economics and contrarian views. Nice to see 15 people already. I'm just a couple of minutes early. So I just want to talk about the economy a little bit, the yield curve. Some of you might want to ask questions about the bond market because I know the bond market is not a market that everyone's familiar with, and also about statistics, uh, about the real definition of inflation and what I think we have now. So, yeah, it's Sunday, March 24th, 2019. Hi, Lord Humongous. Nice to see you here. Hi, David Morsilli. Hi, Laura. And I think I said hi to the other guys, Kaz and Michelle. I think I checked that word witten. I guess that's Polish for hello. I think that's right. So we've got 30 people here already. Yeah, I actually watched earlier today. Hi, Smiley. Hi, John. I watched earlier today Jim Rickards. He was interviewed by Greg Hunter. And yeah, Jim Rickards is a clever guy, of course. He's written a lot of books, interesting books. He has a new book coming out, I think, in July, called The Aftermath. You know, how the world will look like, I think, after next crisis. And one thing he said, though, is that the Fed is trying to keep, get inflation going. And I think that's the wrong word because I want to clarify it because inflation really is the growth, of the money supply, the creation of money and credit above, the amount of savings in an economy. So it's basically when in the fiat money system, when the government or the central banks or the banking system create money out of thin air. That's what inflation is. And we've had that, since 1971, a lot of inflation. What we haven't had officially is rising consumer prices because it's all manipulated. But we know that the cost of living is going up. We received our bill for the council tax, which is a local tax based on the value of your house, so to speak, in the UK, and it starts from April. So we got the new amounts that they're charging. And there's also in London, you pay your local council tax and you pay extra for the Greater London Authority, which is the mayor of London, not the city of London, but Greater London. And do you know how much that went up? It went up 8.9% in 1 year, the tax for the mayor of London. So when they tell us that there's no inflation, I think, Jim Rickards, I think he knows what I'm talking about, but it can get complicated. So I think what the Fed's looking to do is keep the markets, the paper markets, goosed up. The stock market, the bond market. That's what they're looking to do because we have, the rising, the inflation as they define it. In my opinion, we have it, and that's why even though the Fed started raising rates in December of 2015. That was the same around the same time that gold bottomed at 1,045. Gold has been going up. And people might ask, how can gold go up with the Fed raising rates and if there's no inflation? Well, I think that's the whole thing, that they're not raising enough and that there is massive inflation and the cost of living is going up. And that's why gold has gone up. So I actually think the Fed hasn't done enough, and if anything, they're not gonna raise again anymore this year. They're gonna stop the QT in September. So I think things look good for precious metals, to be honest. So let's have a look here. Hopefully that clarified, because some people I've spoken about CPI or inflation, but even I fall for it for using that word inflation. But inflation really is what causes rising prices. And to say that CPI is inflation is actually wrong, but that's how they get away with it. Yeah, Billy is here. He's asleep. Uh, yeah, let's see some questions. I'm going to hopefully just do 30 minutes. I think that's better. An hour is a bit too long. And that's why I warned everyone that I'd be on at a particular time. Nathan, can you give us a layman breakdown of the effect of low and high interest rates on the economy? Well, basically, Nathan, in the past, when monetary policy was more normal, if you want to say it, the Fed used interest rates to speed up the economy or slow down the economy. If the economy got too weak, they'd start cutting rates so that banks would loan more money and get things going, and vice versa. If they saw the economy too strong and labor market tight, measures of prices higher, they would raise interest rates to slow things down. And that's how it used to be until 2008. But after that, it's all gone, it's gone completely out the window. They've been doing that for 100 or 150 years, central banks. So that's basically how it's done. Bonds, yeah, the effects. Well, when the Fed starts raising rates, bond prices start going down, and vice versa. So, but it depends as well. The short end of the bond market goes down more than the longer end, and that's what we're seeing now because the Fed has controlled the short-term rates, and that's why the curve is inverted. The longer-term yields are more, how can I say, when the economy picks up, they tend to rise, the longer-term yields. But when the economy is slowing down, the long-term yields don't go up as much, and the shorter terms go up because the central bank is raising rates. In the 70s, though, you had high rates no matter what. Even if the economy was slow, interest rates were really high, and you had inflation. That was stagflation. Yeah, Pat says get inflation going. We already have. I know. I think I'm not. Maybe Jim Ricketts doesn't live in the real world either, or maybe he's just not. He hasn't been too specific. I think what he meant is to keep the financial markets inflated, not inflation itself, because the measurements that the Fed use are rubbish. The PCE. Sash Media, what's your take on the 18.6-year economic cycle? We are 7-8 years in the current, apparently. I've never heard of this 18.6 economic cycle, actually. So, yeah, I usually thought it was more like, 8-10 years. But but I haven't looked into that. Gary Evans from Bedfordshire. Think your subscribers will benefit greatly from those breakdowns. Thank you. Oliver, don't know if it's still true. In 2014, the lowest council tax in the country was Westminster. Yeah, City of London, third lowest. Yeah, that's weird, isn't it? I don't think many people. Yeah, I mean, yeah, there you go. They can make up the laws, those guys. But if you live in London, Greater London, or in London, if you look at your council tax, part of it is to pay for the Greater London Authority, and it's not. I think it's about 20% of what I pay, but it went up almost 10% this year. Gigs row. During hyperinflation, the mortal gods allowed people to redeem their silver for food while others starved, and this was the only realistic case scenario. I never let you get rich from metals. Yeah, well, I don't look at precious metals as a way of getting rich. I think gold and silver is more of a way to protect your wealth, and it's an insurance policy against a world that's gone mad monetary wise. Yeah, the curve is inverted now from all the way from 3 month to 10 year. Uh, Curtis Porter, do you think it's a bad time to buy a home in Germany? Uh, well, I mean, depends if you're gonna. I actually don't follow that market, the German real estate, but I know interest rates are very low in Germany. I don't know if you're gonna buy it outright or if you need a mortgage. I really couldn't say, but I think worldwide, all the economies worldwide, Germany in particular as well, they're all slowing down. So you might want to think about it. But when I bought my home, first family home back in the 90s, we weren't thinking about prices. We were thinking of a place to live for our family. So that's all I would say. I'm not into real estate investment really, even though uh, my home has been a good investment. James Beardsmore from Australia. Hi, James. Brexit update still up in the air. I mean, it could still. They're trying to delay it. They're also trying to have another referendum, which I think would be a travesty. So it's still going down to the wire, as they say. Let's have a look. Pablo, hi, Pablo. PGG BIS declaring gold as tier one. How good news is this? Well, I made a video a few days ago. This is all, people are making a big thing out of this. There's nothing coming out on the end of the month as far as gold is concerned. Gold is already considered a tier one asset by the BIS, and it has been considered for over 3 years. So I made a short video you can look at a few days ago about that. I even called the BIS begrudgingly because I don't like the BIS, but the press officer told me there's nothing coming up about gold and the end of March. So there you go. But does that mean I'm gonna get rid of my gold? No, it's more important than ever to try to have some physical gold, in my opinion, and silver. It's up to you to decide to do your homework. Uh, the great thing about gold is it's monetary insurance and has no counterparty risk. I mean, Jim Rickards in his interview with Greg Hunter said that he knows private companies, vaulting companies in Switzerland, and they're saying they're doing more business than ever. They can't keep up with the demand for, high net worth individuals, very rich people storing gold with them. And where are they taking the gold from? From the banks, because they don't trust the banks. Because overnight, a bank can freeze all your assets if the government tells them to, but a private company won't do that. South Philadelphia, what happens if the feds can't get rid of their bloated balance sheet? Well, I think it's going to end in tears, South Philadelphia. I don't know exactly what's going to happen. And they went from 800 billion in 2008, the Fed balance sheet, to 4.4, and then now they've dropped it back to 4, and I think it's going to be around 3.9 trillion when they stop. So they will never be able to go back to 800. So usually, there will be an accident. It's difficult to say, but they'll never be able to get back to 800 billion without a huge economic collapse. So I think we are on the road to hyperinflation. People are losing confidence in the central banks. Um, that's all I can say. Blah blee. What are your thoughts on corn, wheat, soybeans in relation to recent floods? Uh, yeah, I mean, I've heard of the solar minimum, that it could affect commodity prices, and I don't look. I've actually traded corn and wheat and soybeans for clients and even for myself some options, but it was a long time ago. But I spoke about the CRB index, which includes those commodities, and the CRB needs to break above 200. That's all I would say. Right now, it's around 185. But yeah, it could push prices higher. I've read about the recent floods, so we need to keep an eye on that. Yeah, that's true, Scott. 49140. Every fiat currency eventually goes to its intrinsic value of zero. I mean, the dollar has survived for a long time, since 1971, as a fiat currency, because they've been able to piggyback with the OPEC and force everyone to deal in dollars for oil, and oil being such an important commodity. But I think that's probably not going to last forever. Probably the longest running fiat money, ever in the recorded history, the fiat dollar. Sash Media, 18.6 year cycle has us in a dip now, but coming soon with booming up for the next 6-7 years. All right. I mean, we'll have to keep an eye. That's interesting. I have a look into that cycle. Brian, do you see the U.S. market on? Did you see the U.S. market on Friday? Did the PPT not step in? I saw. I think it dropped, didn't it? 400 odd points. The Dow, if I'm not mistaken. So I think they stepped in probably on Thursday, the day after the Fed. Because I think the day the Fed came out with their announcement, the Dow dropped 150, and then it went up 200. I think that's when they were in there, the PPT. But in the end of the day, I think central banks are not big enough to control all the markets. They can try to influence it, but they try to get the market higher on Thursday. They succeeded, but it looks, on Friday, the market didn't buy it and it went down. Gary Abbott, it's been a year and not a peep from anyone. Can you update us on the yuan denominated gold oil trading? Yeah, I have updated people. I have made updates on the yuan oil. Well, actually, it's yuan oil contract. It's not a gold contract. There's a gold exchange in Shanghai as well, but it's separate from the oil contract. That yuan oil contract is going really well. I've updated people. They're trading quite a lot of contracts, futures contracts. So I will have another look at it. Annabelle Franks, bet you didn't notice the Dow high on the equinox after I mentioned it last time. Yeah, I did. I remember you mentioning that, Annabelle. And yeah, it did make a high there. I think it was the 20th, the equinox. Could be, I don't know. I'm not really, there are people who follow the sky and astrology for investments. I've looked into some people who they sometimes get things right. I don't think anyone gets everything right all the time. James, what happened to the power of the plunge protection team Friday? Yeah, I mean, as I said, James, I think they came in on Thursday. They tried to move the market higher. They succeeded, but then some of the numbers were really bad. There was a really bad German number on Friday, the manufacturing PMI, and it was really bad. And I think that's when the markets started going down. As I said, the markets, the PPT or central banks, they can try to influence markets, but if the trend is going to go down, it's very difficult for them to stop. If they were omnipotent, we wouldn't have had the dot-com bubble burst. We wouldn't have the '08 crisis. So they're not always powerful, even though they can influence and manipulate the markets. Savio, Italian market is now tied to China. Will China dump goods into Europe through Italy? I'm not too sure about. I saw that the Italian, the Chinese president went to Italy, I think, recently. But I think there's already a lot of Chinese products coming through the Italian ports, so it's nothing new. Daniel LeBurge, March 31st, Federal Reserve plans to implement substantially all Basel III rules. Has made clear they will apply not only to banks, all institutions, more than 50 billion. Well, actually, I think the Basel III implementation doesn't, uh, it's ongoing until 2022. So maybe the Fed is trying to push the U.S. banks, but it's into doing that. But it also has nothing to do with gold. And as Jim Rickards said as well, a lot of American banks don't hold any gold. So there you go. Uh, Paul Fleming, what's your view on MMT? Well, I've spoken about this before. It's just QE for the public. It's more inflation, and it's not modern at all. It's just money printing. That it's rubbish. It's just I'm not for money printing nor QE. So it's just basically instead of having QE for the bankers in the financial market, it's for it to go directly to the main economy. So I don't think two wrongs two wrongs don't make a right. So it's not modern. It's not a theory. It's just more inflation, more money creation out of thin air by governments. Hi Ben, nice to see you, Ben Gray. Do you think China will declare their currency as gold back international reserve currency? Uh, Not right now, I don't think, but they've been encouraging the public in China to buy gold, to save in gold. But I don't think they have enough gold yet to do that. So yeah, I mean, if they did, or yeah, I don't think they're going to do that yet, and I don't know if they plan to do it. Yeah, Lakes 59. The COMEX is just a paper game, and the CFTC never looks into it. So Paul Anders, I am still optimistic on cryptos. It's been very you need to. It's been a bit different. Well, it's been very like how can I say, a long time. It's 15 months. It's been correcting, but I'm still positive. Yeah, cryptocurrencies, the blockchain. It's going to take a while, though, I think, but I think it's going to be big, especially for the infrastructure, I think, of the internet. Scott, does fractional reserve lending more complicated than the bank's lending, all but a portion of the deposit for Brian, do you think the Fed could sink the market to help Democrats, maybe near the elections? No, I don't think so. I don't think this is anything to do with politics. Um, yeah, I think it's just the markets did really well after Trump was elected, and I don't, and a lot of the people in the Fed now were nominated by Trump, so I'm not too sure it's political. If anything, the Fed is trying to help Trump. They caved into a lot of pressure for him late last year. Thomas, bond question. Do you think there will be some kind of sell-off in bonds? I mean, 3-month gives better yield than 10 years. Who in the right mind hold or buy a 10-year? Well, Thomas, the thing about the 10-year, the US 10-year, it's yielding about 2.5% right now. But the German 10-year is yielding negative 2 basis points. So, as a speculator, you know, people buy bonds not just to get an income; they buy it as a speculator. In the future, derivatives market is huge. And the thing is, if you buy a 10-year bond and the price and the yield goes from 2.5 to 2%, in let's say 3 months, your capital gains are massive because they've got something called duration, the longer term bonds. So they actually could do really well price wise. I know it's silly to buy a bond, a 10-year bond that only yields 2.5, but that's what they're doing. It's a bubble in the government bond markets. I mean, the 10-year yield in the UK, the gilts is 1%, and we have 3-4% inflation. So it's not that simple. Uh, Rainbird, Mario, Russia has set a red line to keep Maduro in power in Venezuela. Seems it's all about petrodollar on both sides. Yeah, I saw that headline just before I started the live stream on Zero Hedge. That seems quite significant. I mean, they're trying to tell the U.S. administration, we're here. So that's quite, reminds me of the Cuban Missile Crisis almost. Mark Wells, do you have an opinion on a run on LBMA and COMEX physical bullion holdings due to continuous buying from the East? Well, the thing is, Mark, that a lot of the trading on LBMA and COMEX is just for speculation. And like Jim Ricker, and I worked in the futures market for 20 years, and I did do some quite a bit of COMEX gold futures for some clients, even though bond market was the major market that I covered. I can tell you that the COMEX is not a physical market, even though you have the option to take delivery. It's hardly ever done. So yeah, I don't think there's gonna there could there was a run back in 1980, late 70s, 1980, in silver on COMEX, but the authorities squashed that completely. The Hunt brothers. So now, if a billionaire comes in and says, "I want to take delivery of loads of gold on COMEX or OBMA," they won't let you. They won't let that guy do it. It's all geared towards the bullion banks, the short positions. But yeah, one day, just the physical market will overwhelm this paper market. But I would say the LBMA is more of a physical market, but it's going to take probably, I think Venezuela actually in 2011, they took 106 tons out of the Bank of England physical. And I think that's what drove the market higher in 2011 to 1900. That was under Chavez. So I think it will take like a big, sovereign country demanding its gold from the Fed or the Bank of England to drive the market higher. Hi, Bitcoin Ben. You're welcome. Thank you for that. Bitcoin Ben says, thanks for going live tonight. Love your show. Oh, you're welcome. Thanks for the super chat donation, Bitcoin Ben. I like your show too. As I said, this is just like a 30-minute, live chat, live stream, sorry. So I'll take a few more questions and then I'll call it a day. Brian, did you see on RT that the Ethiopian Airlines is not sending the black box to America as they don't trust them? I'm not surprised. I mean, I recommend if people want to know about the 737 MAX, they go to Richie Allen. It's a YouTube channel, Richie Allen, and search for. I think he made a video about a week or two ago, and he spoke to specialist, airplane specialist. And it's really interesting what he talked about these airplanes. Basically, that they've got too much computers, and like it's almost like the pilots are losing control of the plane. Links 59. Any golf yet? Yeah, I've been playing a lot of golf. I played today. I played. Yeah, didn't play that well, but yeah, playing a lot of golf. Uh, Joshua says the 12-month LIBOR is 281 today and was 265 a year ago. I see the LIBOR interest rate increasing as the central banks are going to lend to big banks at lower rates. Well, LIBOR is the London Interbank Offered Rate. It's the rate at which banks lend to each other in London. The 3-month LIBOR is the one people usually look at, but 281, that's quite high. I mean, that's even, the 10-year yield is at 250 now. So yeah, that's inverted. It seems quite inverted there. I think LIBOR rates are more an indication of the health of the banking system. So if that keeps creeping up, watch out for the banks. Charles Nenner seems very best forecaster. Yeah, I mean he gets he's not bad. He's not perfect, I would think. He said that the stock market would top in the end of 2000, beginning of 2018, and he was about right. I mean, we made a new high in October last year, but it wasn't that much higher. So could you tell me Basel III and gold market, also paper gold market? No, Basel III is about physical gold. It's not about paper gold. Yeah. All right. Just one more question, and then I'll call it a day. See, Basel III. Well, I'll finish with Basel III. Basel III, it's just implementation of rules, banking rules that are being organized by the BIS, which I am very critical of the Bank for International Settlements because it's the central bankers' bank, and I don't think we should have any central banks. But yeah, there's a lot has been made about gold and the end of March and Basel III implementation. But Basel III the implementation is only gonna end in 2022. It's an ongoing process. So I wouldn't get too worked up about Basel III and what it might have effect it will have on gold. Okay, everyone. Thank you very much for showing up. And I wish you all a great rest of the weekend if you're in the US, or if you are in Asia or Australia. I guess it's already the beginning of the week. I wish you all a great day. Take care. Bye.